Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously, create dozens of quick lists, display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. Today we're Monday, July 20th, 2015. The question bar is open, folks. If ever you have any questions, feel free to ask them. The only questions I'm going to answer are questions that are in English, because it's an English show. If ever you have some questions in French, well, you'll have to ask them on the French show at 11:30 tomorrow. Now, with the market situation, where are we right now? We actually have a market situation where only the Nasdaq is the index that is continuing to stand out. And the reason why the Nasdaq continues to stand out, it's simply because we have strong earnings. We had strong earnings from Google last Friday. Netflix did pretty well. Tomorrow, it's Apple is going to release its earnings. A lot of analysts are actually really bullish on Apple. If we take a look at Apple here, the stock is doing pretty well, so allowing the Nasdaq to pursue its bullish momentum. However, though, we still believe on MarketGurus.tv that you can have access for free for 10 days, that a correction is likely on the short term on the markets, because the reason why we do have this upward momentum on the Nasdaq has only been because of the earnings of some major cap stocks. However, there are still others that will follow through. And can those companies continue to actually have growth in their revenues? This is also something that's really important. Concerning the Dow Jones, though, the Dow Jones is still in a situation where it's totally neutral, but the TSX is the index that is taking the biggest hit. Why? Because of gold. Today, all the headlines are on gold, and 2 reasons why gold fell today. First reason, China today has unveiled their gold reserves, and they announced that they had a lower gold reserves, which means that they bought less gold on the market. This created a wave of panic. Another reason why this happened, though, is because, of course, of the interest rate hike, well, an anticipation of an interest rate hike in the US by the end of this year. So as I said, if ever the Fed raises interest rate, it's going to be negative for gold. Why? Because usually when a central bank raises interest rate, that's when we have inflation fears. Right now, there are no inflation fears in the US. Inflation is so-so. If ever the Fed raises interest rate, well, why should investors invest in gold, which is usually an instrument, an asset class that investors use to protect themselves against inflation? So you have no inflation fears. Gold is actually related to help against inflation fears. There's no inflation fears. You raise interest rate, which will again lower inflation. This is actually something that's going to be really negative for gold. So those are the two aspects, China and the anticipation of interest rate hike on the US. So we have gold right now that is clearly getting out of an important downward corridor. What we advise to do on MarketGurus.tv is to say you could go in on some bearish ETF on gold, especially ETFs such as HGD, for instance, that has performed pretty well. ETF such as GDST on New York that has performed pretty well. So those ETF do represent a great entry point. Now, what about the gold stocks though? What can we consider gold stocks to be in a buying situation? For those of you who have a medium to long-term horizon, that might be the case, might be. However, we need a lot of gold stocks so far have not yet reached their bottom of 2014, which means that, for instance, a stock like, if you take a look at a stock like, not Goldcorp, but I Am Gold, for instance, look at the bottom of 2014 is around 185. So you see that we still have some room to go. So those of you who have a medium to long-term horizon might say, if ever I Am Gold reaches this bottom of 2014 around 170, 175, well, I might consider to start building up my position. But the risk that you face and why you need to have a medium-term horizon is that on the short term, we might actually see a decline even lower than that bottom of 2014. Especially, as I said, if the Fed raises interest rate, it's going to create a selling pressure on gold, because gold is it's related to inflation, and there are no inflation fears. So if you're willing to buy I Am Gold whenever it reaches 175, build up your position, willing to tolerate a decrease in the short term, well, you could be definitely well positioned if ever we have I Am Gold where we have a wave of buyers that's coming in. Because eventually, with all this weakness that we have seen among gold stocks, a lot of them will be in a situation where some opportunistic buyers will step in. So those of you who actually are willing to have a higher risk tolerance, willing to see when can those stocks reach their bottom of 2014, those will be well positioned to benefit from a short-term rally among those gold stocks. Kinross Gold. So what I advise you to do is that take a look at your gold stocks, take a look on the yearly chart, where is an important bottom, and watch that bottom, see if ever those gold stocks could actually stabilize towards this bottom before confirming a bullish cycle. So that will be the point where you could start to build up your long position among those gold stocks. But it's really for medium to long-term horizon, and you have to be willing to tolerate a correction on the short term if you buy at the bottom of 2014 on a lot of gold stocks. Now let's continue with some news. We had some news about Greece. Greece today, as finally the Greek banks have opened and they have done some steps to start to pay back the ECB and the IMF. So they will pay back 6.25 billion euros until July 20th. In terms of the news though, Halliburton, they released their earnings, they beat estimates, but revenues declined by 26%. Morgan Stanley, they did pretty well. Revenues increased for Morgan Stanley, so which is a good thing. Hasbro, pretty well, even if revenues decrease. Lockheed Martin, they beat estimates, revenue increase, and also acquired a division from United Technology for $8 billion. And also concerning CF Industries, they actually are talking to one of their competitor in Netherlands, and there's an acquisition there. Vivint Solar is being acquired by SunEdison and TerraPower former for $2.2 billion and some shares of SunEdison. So those of you who hold some shares of Vivint Solar will now hold some shares of SunEdison. And we take a look at the solar vector. Did that create some upward movement on that sector? Not that much. Well, SolarCity rose, but still it's reaching its downward trend. So we really on the short term, we could have probably day traded that stock. Elsewhere, no, most stocks are staying totally flat, neutral, with no clear movement there. So it's really a kind of not saying boring situation, but not a situation that created such excitement on the solar sector, even with this acquisition. Also concerning the Canadian side, the news that we have one news here on Boardwalk Equity. Boardwalk Equities, they sold their portfolio their real estate portfolio in Windsor for $136 million. And New Gold, they set an agreement with Royal Gold, and Royal Gold will give New Gold $175 million for New Gold Rainy River project. Now, New Gold, it's a clear breakdown. It's not because it's on the news that it's breaking down, but it's because of the wave of selling pressure that we have seen on the gold sector. Of course, small cap stocks are going to take a bigger hit. Now, for New Gold, you see that it's tough to say where the bottom could be, though, for New Gold. Even by tracing all those bottoms here, we see that the bottom could be even lower. So for New Gold, right now, it's not in a situation to buy, but by putting it on a yearly basis, we can see that we could get that stock even at a cheaper price. And the fact that they're getting a credible partner that will give them $125 million, Royal Gold that will give him $175 million, it's still a good news. So New Gold is going down, could go down even further down, and I think at a certain point, those gold stocks will represent a great opportunity. Now let's take some questions here. We have some questions from Mark. Is it a good time to buy CAE? Okay, on the TSX. Is it a good time to buy CAE? Well, CAE, the thing I don't like CAE is all those moving average that are there, right? A lot of congestions at $15. We have reached that, so I doubt that the stock could go as strongly. However, look, CAE, it's not a stock that moves by much, right? Even if you're buying that stock right now, the risk that you have is that the stock goes down to come towards 14.39. Let's say the stock breaks all this moving average that are there, goes above the 5100-day moving average, the next target becomes at 1542. So you're gonna need to have a medium to long-term horizon. Let's say you have a long-term horizon on CAE. You love the fact that the stock, despite the correction on the TSX, despite the bearish cycle of the TSX, the fact that CAE stayed neutral, this is a good thing. So you could say to yourself, you know what, I'm willing to get in on CAE within this neutral formation. For me, my exit point is at 1436 if the stock breaks that important support on a yearly basis. And if ever the stock goes above 1546, this is the point where I'll be willing to increase more my bullish exposure on CAE. But right now, in the short term, though, I don't know what your horizon is, but on the short term, your upward potential is limited towards 1549. And on the short term, it's highly probable, by looking at all those moving averages that are there, that the stock might have a correction that could bring it towards its support. But if you have a medium to long-term horizon, you might be indifferent to get into that stock within this neutral formation. And as long as you put your exit point below 1447 and are willing to buy more at 1553, this is also a strategy that you have on a stock like CAE.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above.
So welcome back, folks. So any potential from Z, any potential on natural gas up or down? Well, Z, it's tough to say for natural gas right now. Natural gas is pretty neutral. It will depend on how the inventories play out. So really, in terms of the technical indicators, by looking at them, we see that we could more have a selling pressure. But look, even if we go down below 1342, there's so much support there that's close, and here also as well. So if we go between 1352, we could stop at 1310. The next stop could be at 1261. But could we have the momentum to go to that? And could HND or DGAS, which are bearish ETF for natural gas, could they pay off as much? So far for me, it's tough to tell because I don't really like the potential on natural gas. I think this is still a big neutral formation. So trading a bearish ETF from here to there, you will not have a 5 or 10% on that ETF. Even if it goes below 13, the other potential is at 1250. So there's really small percentage there on natural gas on the downside if it does go on the downside. So right now for me, natural gas is in a clear neutral range. I think you'll be better off to take a look at oil if you want to trade something, because still oil, it's clear that the downward momentum continues, and at least there's some potential towards $16 on oil. And especially with all the weakness of the energy stocks, I think oil definitely has more downward potential. But as for natural gas, I really cannot give you a number in terms of the potential that it has on the upside or on the downside. It all depends on the inventories for natural gas. And what we know is that a lot of shale companies so far, they're still making money even with the natural gas prices at the current level. Now, what about Prometic? Is it time to buy or sell? No, there's no time to buy or sell Prometic, but Prometic is in a critical situation. Let's say those of you who bought that stock at this bottom here at 210, you should and you must take some profit because you have reached a resistance on Prometic. Right now, Prometic is testing dangerously on all those moving average there, 50-day, 30-day, 100-day. So this is a point where also Prometic could reverse its short-term upward trend. So if ever Prometic goes below 230, that's clear that you're going to have to get out totally on Prometic. Now, is it a stock to buy? Well, look at the stochastics here. Stochastics is clearly confirming that we're still heading towards the oversold situation, which means that the wave of sellers is still present on Prometic. So for me, Prometic is not a buy. It's a stock you should hold on to. If you bought that stock at this bottom here, 230 should be the point where you should get out. And as a buy for Prometic, it's clear it has to go above 250, break that resistance of April and May before being in a clear buying signal for Prometic. So that is my advice for Prometic. Now, you bought HVU. What to do on July 9? Well, HVU, it's a tough ETF. So far on July 9, I think you did have a great entry point. We did recommend HVU on Market Gurus TV towards here. Yes, the ETF is taking a hit. However, we're continuing to maintain our bearish view on the market. We think our correction is really likely. Therefore, we're being a little bit more patient on HVU. I know it's frustrating, you're losing a lot of money, but the thing is that investors are not buying as much puts on the S&P 500. So that could be one of the reasons why we're not seeing a surge on HVU. But I believe it more patient on HVU. I think we believe a correction is really likely. And if you take a look at HVU right now, it's tough to say what the target is going to be, but we think that definitely you should be a little bit more patient based on our view on the market. And so far, in our analyst shares portfolio, it's still an ETF that we have where we're going to remain patient on it so far. So I would hold on to it a little bit for that ETF. And actually, I advise you can make a free trial of Market Gurus TV, because whenever we're going to to sell HVU, the call is going to be made on Market Gurus TV. I don't know if you're a subscriber yet, but it's still an ETF that we have in our portfolio. Now, why is GBU going in the opposite direction as the gold market? Well, this I don't know. I've not seen any news on that stock. So far, the stock is staying okay, testing a resistance. I'm not saying it's a buy for that stock right now, but it's definitely a stock that could be in an interesting situation if ever we could go above 50 cents. But right now, the stock is still within a downward trend, has rallied a little bit, but it's still not a buying signal for me at this point, though, even if it's resisting a little bit more. But 50 cents is going to be the buy on GBU. Now I want to finish here with some of the best breakdowns of the day. A lot of stocks in the energy sector on the Canadian side. Imperial Oil, AltaGas, those stocks are continuing to take a hit. And also there's a lot of breakdown in the potash sector. Intrepid Potash is one of the best breakdown so far, so it's still a nice opportunity to short. Owens, Illinois also as well, a clear nice opportunity to short. And as for the day trade of the day, it's that stock here, ANTH on NASDAQ. Really, if we take a look at that stock with less minute here, I'm going to put 2 minutes on that stock so you could see clearly all the several entry points that this stock gave us. So all those ones here have all been nice entry point on a stock like ANTH. Now as for the next entry point is at 10.45. If you got in here, you should not panic as long as the stock doesn't go below 10.20. There was a false attempt there to start a breakdown. Finally, we had a rebound. So right now, stay a little bit more patient, but towards 10.47, that's going to be the new signal to get in on a stock like ANTH. So overall, folks, we do have markets, especially the TSX, that is taking the biggest hit. American markets are slightly resisting, mostly the NASDAQ because of strong earnings from major caps. However, we believe that a correction is likely. Concerning gold, gold is taking the biggest hit today. However, as I said, for those of you who have a medium to long-term horizon, you could actually be in a great situation to buy a lot of gold stocks, Kinross Gold, for instance, at a bargain, or IAM Gold at a bargain, if ever they reach their bottom of 2014. However, you're going to have to be willing to tolerate a short-term loss, because if ever the Fed raise interest rate by the end of this year, we will see another weakness on the gold sector. But for the short term, for those of you who want to trade in the short term, the best alternative is to go with some bearish ETF. HGD, GDST do represent today your best alternative to trade the gold sector, a bearish momentum. So I wish you all a good trading. See you tomorrow on the Swing Trading Show on DecisionPlus.com.